We are back here on Consumer Choice Radio, broadcasting on the Big Talker, 106.7 FM, and Sauga, 960 AM, Peel Region, Ontario. We have on a great friend of mine who is a commentator you've likely seen come across your feeds at some point. We're speaking with Fergus Hodgson. Fergus is the founder and executive editor of the Latin American intelligence publication Econ Americas. He's also the roving editor of the Gold newsletter. They have the Gold Newsletter podcast, which is great. And he's also a research associate with the Frontier Center for Public Policy in Canada. So Fergus, thanks so much for coming on Consumer Choice Radio.
Thank you, Yale. I'm excited to be with you.
Yes.
And with David.
Yeah, of course. And we all know each other. We've collaborated on multiple things, and now we get to talk about the news of the day. And I think there's a lot that would be interesting to our listeners. I think number one is one of your columns. You are published quite often in the Epoch Times. And this article is entitled 4 Signs That Inflation Has Arrived. We're obviously in a new era of finance when it comes to government, of stimulus spending related to COVID bills and all this kind of stuff. But if you could just give us kind of the breakdown of the 4 signs that inflation is here and here to stay.
Yeah, great. I'm really pleased to talk about this one, Yale. And we all have the hindsight of the 2008 global financial crisis, where a lot of us expected big inflation that just didn't materialize. And so then the immediate question is, well, why is this time different? And we've gotten to a point where there are 2 big changes. One is that the level of monetary stimulus is much greater than in the past, right? We're actually going to helicopter money, where people are just dropping cash from the sky, well, not literally, but almost. And then the breakdown in supply chains, right? So the transport networks, the movement of people is so severely inhibited that is limited supply. So I wrote this about maybe 5 months ago now, but basically I said that there are clear signals that we actually already have inflation. And the first, of course, is that the Federal Reserve itself has inadvertently admitted this fact by changing the way it calculates its inflation target. So the Federal Reserve publicly states that it will shoot for 2% inflation, but it has waffled that and said because it's been lower than 2% in the past, it's actually going to allow it to go higher than that to compensate. And my basic view is that's just accepting that we're going to have higher than 2% inflation, we already have it. Now, the second major one, which is a wonderful development as far as I'm concerned, is the rise of non-governmental inflation measures. And in fact, there is one at MIT which has this online inflation measure, which takes, just thousands, hundreds of thousands of prices all across the internet and calculates their changes. So we're getting basically a crowdsourced measure of inflation. So a fascinating development. Of course, this does not capture everything, but there is also what's called the Chapwood Index, which has been measuring inflation in the major cities of the United States. And that's been going at about 10% for the last 5 years, in fact. And so we're already at a very high level, and just the latest increases will hasten that. And when I wrote the article from memory, it had already gone through about 10% through the first half of 2020. I can't remember what the level is since then, but basically, we're seeing private metrics that show higher levels of inflation than the government metrics. So that in the United States would be the Bureau for Economic Analysis, I think it is. I'm not sure right now, but no, the Bureau of Labor Statistics. And so these metrics are actually relatively resolute. They're relatively neutral. There's no real gaming them or playing games. It's quite simple. The other elements in the 4 were that there are particular areas of the economy where inflation is hitting harder, right? So in basic commodities, in staple items that are not easily avoided, right? So what happens is that the way government metrics calculate inflation, they will try to focus on what we can, our changing spending patterns. But the fact is that things that we cannot avoid are rising in price, which means that it's basically an inevitability that the numbers will appear in even the official metrics soon. The final one is just the measure of gold. You know, I host my own podcast on gold or precious metals. And the fact is that gold is even now, there's been a recent downward trend over the last couple of weeks, but even now gold is up 18% on last year. And I just did a show recently about if we look at regression from the past 20 odd years, I think 30 years actually, gold is set to go up to between $2,000 and $3,000 US dollars this year, and it's at around 1750, 1800 of late. So there are many signs it's happening, and even prominent economists actually are getting on board with this and acknowledging that inflation is basically here. Steve Hanke is the most prominent one I refer to. He's with Johns Hopkins University and the Cato Institute. And to our Canadian listeners, my guess is going to be worse in Canada, actually, because all these policy changes have been even more aggressive up there than here. And yeah, so both sides, the supply impediment and the fiscal stimulus, relatively speaking, these are stronger.
Yeah, I mean, I know in Canada already, so there's housing inflation. The housing market is hotter than it's ever been. You're seeing you're seeing kind of true middle class housing go from 580,000, and then being upbid to the high sevens or low eights, which I mean, for me, just looks unsustainable.
This is suburban Ontario?
Yeah, suburban Ontario. So we're not talking like downtown core. We're talking between 80 to 150 kilometers outside of Toronto, and you're seeing this huge upward swing where if you just look at the metrics, like you'll see a house double in the last 5 years, which is something that I don't think we've ever seen before. And then, of course, there's also the good side for Canada as well. I know that Sylvain Chalbrois from Dalhousie is projecting that most basket goods, like vegetables and bakery goods and meat, are going to rise 3.5% to 6.5% in 2021. So we're really starting to see other classes just outside of assets start to inflate upwards, which I think is particularly dangerous.
I agree, mate. This is not just limited to the United States or Canada either. In my home country of New Zealand, even though the country is basically blocked off from the world, house prices are at record highs. Of course, it's because of such easy credit. And of course, that has to go somewhere. And it just means that the returns available on real estate in places like Canada are just less, right? So rents have not risen at the pace of the housing prices. So your capitalization rates are lower. It's just less lucrative. But so long as the interest rates are lower, and this is one actually opinion from Steve Hanke, that the interest rates from the US Federal Reserve and from the Bank of Canada just will have to rise in the near future. There's no getting around it. And there's going to be a great deal of pain when that happens, because first, all these governments have basically taken on huge debts, and how the interest payments are going to consume a greater and greater level of tax revenues. And also because that will then make lending much less exciting, and will take the heat out of the housing market. So people who have bought at the top will feel it.
Well, yeah, and then you'll also have the issue of folks who have maybe overextended on the assumption that, well, yeah, they're going to buy in at 810 now, but in 10 years it'll be worth 1.2 million. And then you have the prospect of higher taxes. You have the prospect of maybe a rate hike. So their rate goes up. So if they're at the cusp of what they can afford, they then become one small shock away from falling into that deferral or default stage.
There's one other element which just occurred to me last night, because there's a new report out from the Frontier Center, or it's a demography, a housing affordability survey, which is relevant to consumer choice, and it refers to affordability. I'm guessing it's a bit delayed, and that would be data from 2019 or early 2020. But my guess is too that once housing gets to a certain level, once it gets to the point of the Vancouver and Toronto levels, there's going to actually become popular resistance to say this is getting out of hand. We either need public housing or we do need to open it up. The people who've relied on regulatory protection to inflate their housing prices, I think they're going to come in for a rude awakening that at some point that's going to come back to haunt them, that protection can go away and they'll feel it. So I do know in New Zealand that is happening, that there's a great deal of resistance now to the fact that house prices have gone just sky high.
Yeah, it may be the ultimate battle between the NIMBYs and the YIMBYs. For listeners, that's the not in my backyard and the yes in my backyard. And I use NIMBY to describe those who oppose pretty much all development. I mean, I see it right here where I live in Oakville. There's resistance to pretty much anything of remote high density, which is of course needed. And so we may be in for a rude awakening in the greater Toronto area, where you start to see a real kind of popular push for an increased supply. Now, is that going to happen? I don't know. It's all done at the local level, which is a very complicated level of politics. But
Yeah,
it's
that's a
but
challenge,
you
David, because don't you see the tension too? Because many of us, maybe we have nostalgia for the old way of our towns or the appearance, but at the same time, if you've got a growing population, what are you going to do, right? So I think it is a difficulty because, much like you, I guess. I mean, I assume Yale, you have nostalgia for maybe the Montreal landscape or downtown or whatever. So we don't want to just railroad that, but at the same time, people need a place to stay. And it just seems that people really want to be clustered in Toronto, Vancouver, Montreal, in Canada. That's where the work is.
Well, these are the best places to be, you know. We're speaking with Fergus Hodgson here on Consumer Choice Radio. Fergus, you write about a lot of different things that are, I think, interesting to consumer choice, markets, finance. You're now doing some deep studies on finance. I thought of having you on in the wake of everything that was happening with GameStop and the market
Sure.
and meme stocks. I think at this point you probably have a more technical understanding, but sort of what is your reaction to what has played out over the stock market the past couple of weeks? Crypto going through the roof and now back down again, and it just seems as if we're in a really strange time. What do you think about all that?
Yeah, the key insight or takeaway from me, from my perspective, is that there's been a declining level of trust in both corporations and financial markets. The irony is that as these markets become more open to the broader masses, their distrust has become manifest in how they participate with it, right? So there's actually great data from the Chicago booth and Kellogg School business schools, and they show that basically anger about the economy has gone up in 2020. Surprise, and the financial trust has gone down. So the anger is the highest since 2013, and financial trust, I think it's still higher than it was in previous years, but after 2008, there was kind of a resurgence. Trust was growing, but that has gone back down again. So basically, we're seeing the manifestation of this lack of trust in financial markets, the sense that there are bailouts going on, that they're unfair, that when there are these, COVID-19 supposed bailouts, that the scraps, the leftover scraps, go to the people, and the protected classes, such as there was something like maybe it was a 20 million or some massive amount for a little wee opera house in Washington D.C. getting a bailout. I'm going, is this really necessary? This place is already basically built with gold and diamonds. Do we really have to give them another 20 million? So people are recognizing that they feel like the game is rigged, and they're just trying to take vengeance upon whoever they can, including hedge funds, which aren't really the villains here, to be frank. I don't see them as villains. And in fact, hedge funds, the research shows, are not that lucrative, at least for the users of them, right? That hedge funds are more of a status symbol than a profit maker. And because they come with such high fees, it's incredible that they still exist. So I do think it was comical and maybe entertaining to watch, but I don't see the hedge funds as the villains here.
Wow, I didn't think we'd have a supporter of the hedge funds that would come in so swiftly. So,
well, also because hedge funds actually lead the way in much financial innovation.
Sure.
And that's one of the reasons why they need accredited investors who have, I think, over $1 million in net assets or net worth, and so they are allowed to do many more creative things that can then trickle down to other people later on.
See, that's a good nugget of knowledge here from Fergus Hodgson on Consumer Choice Radio. We'll be right back after this, and we'll be right back. We got plenty more questions to throw at Fergus And I know he's going to have some great responses for us too. And we are back on Consumer Choice Radio, broadcasting throughout North America and the world on consumerchoiceradio.com. Fergus, we wanted to bring you back because we got plenty of other questions, my mate. We can't just confine you to one segment. We got to go to two. There's a lot of other things that are happening in the news related to cryptocurrencies. I know that's been big. But one thing that you've been able to do, and something that I feel very similar in, is that, as someone who is a public policy professional, more of an economist, I would say, you're seeing the trend in various countries, and you have connections to your home nation of New Zealand, to Ireland, to Canada. And there's a lot of stuff happening in Canada right now that probably is not being picked up by a lot of major media sources. I know there's a lot of stuff that you're interested in. How do you see sort of the future of public policy in Canada and how things are progressing there?
Oh, Canada has so much going on. Yeah, I mean, you know this. You've been a journalist and writer, and so has David in Canada. But things are really changing in Canada, and particularly because of the declining fiscal situation of the nation. So Canada actually has been relatively fiscally responsible versus the United States, right? They've got the Canada pension plan, which is underfunded, but nowhere near to the degree that the Social Security system is underfunded. And they've had the luxury of being able to engage in this enormous equalization scheme, which is basically sought to help out the poorer provinces such as Nova Scotia and, I hate to say it, your own one, Quebec, a bit there.
No.
And so that gravy trade, I fear, is coming to an end. And we're fortunate too that there's just incredible research going on from the likes of the C.D. Howe Institute, the Fraser Institute. So we can consume this and see that there are winds. There are the winds of change in Canada right now. And one drawback that I fear the provinces are going to feel as this fiscal tightening happens is that the federal government or the national government of Canada is going to say to the provinces, if you want to get this kind of quasi bailout money or equalization money, you're going to have to do certain things. The strings attached to this money are going to multiply. And I'm concerned that the delegation or federalism within Canada is really on the ropes and will struggle in the coming years. That's going to heighten tensions. And one of the sad things to me too is that the province Alberta, where I have my family connections, that province has basically gone from a zero debt province to having more debt per capita and as a percentage of GDP than Saskatchewan and British Columbia in a matter of 10 years. So that is embarrassing, and it just means that no more kind of gravy train coming out of Alberta is going to continue.
Gravy train, indeed.
Yeah, and so on that, I mean, Alberta is a tricky one. Questions of diversification and maybe over-reliance on the energy sector and what they're going to do next. I know you've touched on this off air with us, but I'd love for you to share with our listeners your thoughts on Western independence, if this is something that is worth taking a serious look at, if there are some serious grievances, and just walk our listeners through what that looks like.
Yeah, there's a long history to the move for Western independence, right? So many people, including Barry Cooper, maybe the intellectual figurehead of Western independence in Canada, they believe that Alberta and Saskatchewan never should have entered Canada, right? That it was done in a forceful manner. But my basic, if we just pull back from all the current events and just look at the history, it's just that there simply is a different people on the prairies, right? Especially in Alberta, which is, I guess, more isolated from Ontario or the sort of the political power centers. And that tension, much like the tension within the United States is getting more pronounced and more visible, is just becoming more visible, right? So you can see this easily in let's say support for the CBC. Most Canadians actually support the CBC and even want to increase funding. Don't get me started on this, but that's the fact of the matter, that most Canadians support the CBC and want to increase funding to even maybe reduce their advertising. But that's just not the case in Alberta, right? They cannot stand the CBC. And there's just this there's a great deal of work now with the Western Standard, this publication that's risen to try to, I guess, tap into this sentiment that there really is a different culture, a different people on the prairies, and it's very hard to